Alibaba is one of the most successful companies in the world. However, over the past couple of months, Chinese stock valuations have been battered due to increasing regulation pressure from the Chinese Communist government. In this video, we look at Alibaba the company, its diverse and sometimes secretive revenue sources, and determine whether or not Baba's stock is a good long-term investment. You can jump straight to the stock analysis and my year-end price target with the timestamps in the description below. Let's get started. Alibaba is a Chinese multinational technology company that was founded in June of 1999 by founder and former CEO Jack Ma. Jack Ma and 17 of his friends worked to create Alibaba.com, a Chinese business-to-business online marketplace in his apartment in Hangzhou. Just a few months later, in October of 1999, Alibaba received significant investments from Goldman Sachs and SoftBank. In 2003, Jack Ma expanded Alibaba into the global e-commerce market by launching Taobao Marketplace, Alipay, Alimama.com, and Links. Notably, Taobao competed against eBay's attempts to enter the Chinese market, and by using razor-thin margins, was able to entirely force out eBay by 2005. That same year, Yahoo invested $1 billion in the company, buying a 40% stake and allowing Alibaba to post most expensive IPO to date, bigger than those of Google, Facebook, and Twitter combined. Alibaba went on to buy back much of this stake in 2012 for $6.3 billion in cash. In 2019, Jack Ma stepped down as Alibaba's chairman, handing the role over to the company's current CEO, Daniel Zhang. Zhang, a graduate of the Shanghai University of Finance and Economics, originally worked as the chief financial officer for Taobao and then president of Alibaba's Tmall, where he created the Single Days shopping event. In 2013, Zhang took over as chief operating officer of Alibaba and eventually succeeded Jonathan Liu as CEO in 2015. Today, Zhang leads a huge multinational company that has aggressively expanded into multiple markets. So much so that it's difficult to keep track of Alibaba's business units and subsidiaries. But we're going to give it a try. Bear with me as it's a long list. Most notable is Alibaba's e-commerce and retail service platforms. This includes Alibaba.com, a business-to-business online marketplace, AliExpress, a wholesale online marketplace allowing consumers to buy smaller amounts direct from producer, Taobao, a consumer-to-consumer online marketplace similar to eBay, and Taobao Mall, an online retail platform offering global brands to a quickly growing Chinese middle class, amongst a number of other subsidiaries targeting physical retail, travel accommodations, and other geographical markets like Singapore and Thailand. Alibaba has aggressively expanded into every Chinese commerce market it could find and has targeted similar expansion in other countries. Alibaba has made significant investments in advanced computing and software services. Alibaba Cloud, a subsidiary of Alibaba Group, comprises about 8% of total revenue. Similar to Amazon's AWS, Alibaba launched Alibaba Cloud in 2009 and provides cloud computing services to Chinese companies. AliOS is a Linux-based operating system designed for smart cars and IoT devices, developed by the Alibaba Cloud Company. Also developed by Alibaba Cloud is the Blackiron 910, a mobile processor chip, and the Hengwang 800, a supercomputer used to accelerate the development of artificial intelligence and machine learning applications, and rented out by Alibaba Cloud to other companies. Alibaba is also dominant in the Chinese fintech industry. Alipay was launched in 2004 and acts as a third-party online payment platform similar to PayPal. It was spun off in 2010 and now operates under Alibaba affiliate Ant Group, one of the most valuable fintech companies in the world. Alipay was scheduled to IPO at a valuation of more than $300 billion, but came to a screeching halt the night before. More recently, Alibaba has made significant inroads in media services. Alibaba's digital media and entertainment group focuses on producing live experiences and hosts Daimai, an entertainment ticketing platform similar to Ticketmaster. Alibaba purchased China Vision Media Group in 2004 for $800 million and transformed it into Alibaba Pictures, one of the largest film production companies in China. Alibaba also has a very lucrative music platform in Ali Music. Introduced in 2005, it too has taken significant market share in China's digital music industry. As if that was not enough, Alibaba has its hand in a large number of different markets, including messaging applications, digital maps and navigation, email services, pharmaceutical e-commerce, sports, news media, and gaming. Lastly, Alibaba operates a venture fund that invests in Chinese startups and has significant investments in China Unicom, the Chinese state-owned internet services company. However, Alibaba has faced significant headwinds throughout its history, and perhaps more so now than ever. Alibaba has been involved in a number of scandals and more recently has been dealing with increasing pressure and regulations from the Chinese government. Alibaba has already paid the Chinese government billions in anti-monopoly violations. It is rumored that Chinese President Xi Jinping personally shot down the aforementioned Alipay IPO and reportedly exerted great pressure on founder Jack Ma in recent years after Ma had made critical comments of the government. The risk exists that the Chinese government could exert increasing influence on Alibaba to the detriment of its shareholders. Furthermore, distrust in financial transparency within Chinese stocks has further discounted the stock in eyes of international investors. Baba's stock as a result has been battered in recent months. That said, Alibaba appears to be taking advantage of weakness, pledging to repurchase up to $15 billion of Alibaba stock, effective through the end of 2022, an indicator of confidence in the company's long-term growth prospects. Was the company making money, and is the stock worth investing in? In Q2 of 2021, Alibaba pulled in net revenue of $31.8 billion, accounting for a 34% year-on-year increase. Operating income for a quarter was $4.7 billion, and adjusted EBITDA at $6.4 billion, both extremely impressive numbers. However, both also down from Q2 2020. Alibaba says this is a result of significant investments on growth initiatives and in strategic areas to capture incremental opportunities. Alibaba's active user base grew to 1.18 billion, with 912 million Chinese consumers and 265 million international consumers. Alibaba has added 45 million users in the 12 months prior to March of 2021. Alibaba's domestic commerce platforms have somewhat slowed in growth, but its cloud computing business became profitable earlier in 2021. Alibaba's cloud computing, international commerce, and logistics divisions posted growth rates ranging from 29% to 54%. Alibaba Cloud remains a core growth piece for Alibaba and is well positioned to take advantage of emerging technologies. As of June 30th, Alibaba holds cash and cash equivalents of $72 billion and free cash flow of $3.2 billion, a cash cow to rival the biggest American tech companies. That is to say, Alibaba is a powerhouse in terms of pulling in revenue and has positioned itself to be a dominant player for the foreseeable future, with multiple business units growing at a rate of over 30% year on year. If you found this video of value so far and would like to help the channel, consider liking and subscribing. Thanks. Alibaba currently trades around a market cap of $460 billion and a price of $170 per share. Baba stock trades at a price to earnings ratio around 21x, which in this market is very attractive and historically low for the stock. Although EBITDA growth has slowed down in the past 2 quarters, Alibaba states that this is a result of the consolidation of Sun Art, a supermarket chain purchased by Alibaba Group for $3.6 billion. Given the consistent growth in their core business and the outsized growth in cloud and logistics divisions, Alibaba still very much has the ability to grow at an aggressive rate. I'm inclined to believe that Alibaba has the ability to continue to grow at more than a 25% CAGR despite its already massive market cap. They continue to aggressively invest in industries and markets outside of China. They've established e-commerce, social, financial, and tech platforms that in many cases dominate China. Its expansion to other geographical markets, especially in Asia, will increase their total addressable market and ability to grow into the future. Alibaba no doubt trades under a suppressed earnings multiple given its historical growth and position in high-growth industries. As a base case, if we use a similar conservative EBITDA of 15x, a yearly EBITDA CAGR of 25%, we get a 2026 EBITDA of $64 billion. At a 10% discount rate, we get a 1-year price target of $230. That would represent a nearly 36% return on investment. I think Alibaba has far more potential than what the base case may dictate, and if fears of government regulation start to subside, investors will be more willing to assign aggressive growth multiples that I believe more accurately reflect Alibaba's value. If we use a more aggressive multiple of 22x, similar to that of Amazon's, and a yearly EBITDA CAGR of 30%, we get a 1-year price target of $412. Alibaba has been one of the most difficult stocks to value. It has a huge amount of products and services that are separated into a wide net of subsidiary and affiliate companies. From a financial perspective, they remain rock solid, having huge amounts of cash on hand, great free cash flow, and a growing business in many promising sectors. However, their stock price remains depressed because of the shadow of the Chinese government. It's unclear to me when or if this will ever dissipate, but I'm inclined to believe that even if it doesn't, Baba remains a good investment. As always, please do your own research before opening any position. I'm not a financial advisor, and these are just my opinions. If you'd like me to cover a stock you're interested in, leave a comment below. If you're interested in watching future videos on investing in the stock, crypto, and real estate markets, consider subscribing. But most of all, thank you for your time, thank you for watching, and invest safe.